Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Euro-dollar, a second bearish black crow yesterday and a follow-on lower after Friday's bearish engulfing pattern. The top side is now once again capped by the dark blue neckline, currently at 116.65 for the combined June to July head and shoulders top, which has also a double top formed from the head and the second shoulder. Whilst the downside is supported now by the combination of the green short medium moving average, currently at 115.96 and the November 2020 low at 116.02, with the 2019 high just underneath at 115.70. Further up we have the October 21 high at 116.92, and beyond this we have nothing much until July's high at 117.88, and that's the July this year high. And the downtrends also in between, which are currently at 118 even and 118.03, and also we've got June's high at 118.29. Looking further below, we have nothing much until the congestion between 114.95 to 114.82, consisting of the February and January 2022 highs respectively. Now, the large combined head and shoulders top and double top pattern seems to be the more dominant pattern here, and our previously targets for this pattern below. Thus, for the head and shoulders top, a primary target X1 in the 113.10 zone, with a harder to reach secondary target X2 down in the 111.41 zone. And for the double top, a primary target down in the 114.55 zone, something I pointed out 2 weeks ago, and a secondary harder to reach target X down at the 113.22 zone. As you can see, the primary target for the double top has already been reached. Okay, so looking at this pattern over the last weekend, I came to the sudden realization that we might have or may have a fresh pattern building up. A late June to date possible descending expanding wedge pattern, which is currently 112.48 to 117.58. Now, I've not highlighted this pattern as yet, but I'm watching it with great interest. Finally, as I've said now repeatedly for months and months, we are set up with 7 and a bit months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between, we would have a lesser outside year pattern. I'm at this stage not going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now we are looking very much like an annual key reversal up. Now, so far today, resting on top of the support afforded by the November 2020 low and the green short medium moving average, and not doing very much apart from that. Cable, aka sterling against the US dollar. Another, this time quite large, indecisive spinning top yesterday after the previous session's same. But this time it can also be seen as a key reversal down because of the long tongue and tail. Though without another bearish pattern here, I have my misgivings about such a singular pattern. Below the market, we have the rising mauve medium moving average, currently 133.74, and the breach dark blue neckline, currently 133.53, of the mid-May to late July head and shoulders top pattern. Whilst above, we have congestion at 134.36, and then a congestion band between 134.83, the September 2020 high, up to 135.81, containing within it the green flatlining short medium moving average, currently at 134.99. Now, we are still just about within the mid-April to date expanding wedge pattern, currently at 132.59 to 139.78. And the lower trend line sits within an interesting congestion zone below between 132.46 to 132.65. Not a very wide band, but an interesting one. All this after the breach lower 2 weeks ago that was repaired. However, over the weekend, I noticed a possible new pattern, a possible early July to date descending expanding wedge pattern. And that's currently 129.87 to 134.35. Yesterday's action breached the upper trend line but failed to close over it, and for the moment I will leave it unhighlighted. All this higher action threatens the one remaining target below for the recent head and shoulders top, as we have already achieved the primary target in the 131.48 zone. However, we still have the secondary harder to reach target X1 further down in the 129.40 zone. I should also note that last month was a monthly key reversal down here. Finally, much like euro dollar, we are set up here for this market to make the rarest of patterns, a possible annual key reversal. Thus, if we close on Wednesday the 31st of December 2025 either over 127.29 or under 125.11, then we'll be on. Anything in between will have a lesser outside year pattern. I'm at this stage not going to contemplate what the result at the end of the year will be, just that we are set up now to achieve one, though it does look like we are moving towards an annual key reversal up. So far today, the market has moved up to push over the upper trend line of the possible new descending expanding wedge pattern and the congestion at 134.36, and up towards yesterday's high and the 2024 high, and the 24 high at 134.36. US dollar against the Japanese yen. A second bullish white soldier yesterday, and a move up and close over the lesser Fibonacci line at 148.11. We have overhead now Fibonacci congestion at 148.68, but the next congestion of note is the combination of flatlining gold long moving average, currently at 149.34, and the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Looking below, we have Fibonacci support. Quite good Fibonacci support at the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69. And then the rising short medium moving average, currently 146.06, and the declining medium moving average, currently 145.55. We're also now in between the dark blue middle tine below, currently at 144.83, and the dark blue upper tine above, currently at 155.43, of the important large, shallow, and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of two major patterns in operation here. The other one is the broken bright red mid-January to mid-June, as I said, broken descending expanding wedge pattern. This had a break higher in mid-June, though it's more like a stroll higher. The primary target up at 150.5 was reached 2 weeks ago, though we still have live a secondary, much harder to reach target X1, up at 158.85. Now so far today, the start of a small follow-on higher and approaching the next Fibonacci line at 148.68. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier yesterday and a follow-on high to the previous session's key reversal up and bullish engulfing pattern. The top side was once again capped by the congestion between 719.64 to 719.91, consisting respectively of the May 2020 high and the 50% Fibonacci line of the September 22 to April 25 move, with a close right on the May 2020 high. Meanwhile, support below was once again from the flatlining green short medium moving average, currently 717.97. Further up we have resistance from the dark blue neckline extension, currently at 721.59, of the late August to early November 24 reverse head and shoulders pattern. That is just above the slowly declining mauve medium moving average, currently at 721.57, and the slowly rising gold long moving average, 724.71, which is actually higher. In between the two moving averages, we have the congestion at 722.88, which tied in with the lows from earlier this year between January to March. Looking further down, we have the bright red trendline extension, currently at 715.34 of the mid-January to late April 2025 descending triangle, just ahead of further Fibonacci supports at 714.95 and 714.48 that can be regarded as one single congestion zone. Finally, a strategic observation once again, and one I'll continue to be making here. Please note how the gold long moving average, currently at 724.71, has been, despite some up and down waves, relatively flatlining for quite a long while. So that if prices do stray too far away from it, then they seem to be brought back in towards it, and that applies in either direction. So far today, capped once again by the congestion between 719.64 to 719.91. US dollar against the Brazilian real. A bullish indecisive spinning top yesterday, but one that could also be seen as a bullish opening white Mariboso type and a second bullish white soldier. This is all very interesting as it shows how the previously mentioned congestion below acted as support for the recent attempt lower, consisting of the purple May 24 today uptrend, currently at 543.37, and that's within a congestion zone below, made up from the 50% Fibonacci line, the April 22 to December 24 move at 544.57 down to 540.16. This congestion also contains the dark blue neckline extension to the June to September 2024 head and shoulders continuation pattern, and that's currently 542.63. Meanwhile, looking above, we have the green short medium moving average, currently 553.06, and further above, the declining mauve medium moving average, currently 561.95. Now, in between, we have the bright red upper time, currently at 555.47, of the mid-December 24 to mid-December 24 to mid-April 25 bearish Andrews pitchfork. This pitchfork has been the showrunner here since spring. Interesting, the mauve medium moving average is also not too far from the interesting and significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. US dollar against the Mexican peso. An immediate countering bullish engulfing pattern and bullish opening white Mariboso yesterday after the previous session's bearish engulfing pattern, if only just. The base of the action was on the combination of the breached bright red upper time, currently 1851.80, of one of the two recent showrunners here, the robust bright red early May to late June bearish Andrews pitchfork, plus the other major recent pattern here, the many months old and breached many times, early May to late July dark blue bear channel, and that's currently 1826.88 to 1850.81, plus a narrow congestion between 1850.81 to 1851.71, and that contains the February 2021 lower 1851.71. Meanwhile above, we have the slowly declining green short medium moving average, currently 1883.83, entering a congestion band above between the 50% Fibonacci line of the April 24 to February 25 move at 1876.94 and up to the 1885.40 area. Now, so far today, a seeming small attempt higher, but not by much, as we are still within yesterday's range.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.